What's up, guys? Mickle here, and David Schwartz just put out a very interesting tweet saying that they will ultimately have to decide between their vision and their survival. In this video, I want to break down what he was talking about here, what this could mean for the ongoing Ripple SEC case, because I definitely have some things to show you that you are going to need to see. I also want to talk about at the end of this video whether or not ODL, Ripple's trademark product, will increase the price of XRP. I see a lot of people saying that ODL will have no impact on the price of XRP. I want to show you what I have to think about that because I think it's a perspective you are not going to want to miss. Like always, your support means so much to this channel. If you want to see more videos just like this, make sure to hit the like and subscribe button down below and turn on bell notifications. These three simple things are going to go such a long way in helping this channel grow, and it really does mean so much to me. With that said though, let's jump right into it right after a quick word from the sponsor of this video. So a lot of what we talk about on this channel is long-term investing, but it's so important to point out that you can actually make some serious profits trading this market as well. Now, for a lot of people, trading is daunting, it seems scary, and that's why I think Bybit offers such an amazing product. What Bybit is offering is actually a feature called copy trading, and it allows you to copy the trades of some of the most profitable traders in the market. Now, I think this feature is absolutely awesome because it allows you to see the returns of any traders you want to copy, and it allows you to actually look at the time periods they have been getting these returns. This is a super cool product, and it's important to understand that this is something you can use to diversify your portfolio and get some other ways of investing without fully committing to trading the markets yourself. This is a great way to learn how to trade, and Bybit is even offering an awesome promotion right now where if you sign up using the link in the description of this video, they will help fund your trading account, so definitely check that out before the promotion is over. So I want to start out this video and go over a brand new crypto securities case that was just brought, and this case actually isn't being brought by the SEC, but is instead a class action lawsuit. But something very interesting we are just hearing now is some very smart lawyers following this case are already saying that it could be very beneficial for Ripple in the Ripple SEC case. We're going to break down exactly why that is, but I want to start off and go over exactly what's going on here, and that is that Dapper Labs is being sued for their initial sale of the NBA Top Shot NFT collection. Now, this is pretty interesting because the NBA Top Shot NFT collection definitely gained a lot of traction amongst retail traders, so there is going to be a ton of eyeballs on this case. Now, essentially, what is being alleged here is that the initial sale of the NFTs should have been registered with the SEC. Now, there are already some very important distinctions being made here that are going to have implications for the Ripple SEC case. So essentially what is being alleged here is not every single sale of an NFT was a security in this violation. Essentially what is being alleged is only the first sale by Dapper Labs of this collection, only that was a securities violation, but any secondary sales are not securities violation. Now, this is a very important distinction that's being made here, and this is why it's so important to the Ripple SEC case. One of the worst allegations the SEC made in the Ripple SEC case was that even secondary sales of XRP, even those secondary sales constitute as securities transactions. This exact allegation is actually what got John Deaton in this case. John Deaton was not going to sue the SEC simply for the SEC coming out and saying Ripple's initial sales of XRP, those sales should have been registered. John Deaton was not going to argue that point because it's a toss-up whether or not those could have been securities violations. But what is not a toss-up is secondary sales. Sales on the secondary market. Sales in Ripple's ODL product. These sales are not an investment contract. These sales sometimes have nothing to do with Ripple. It's secondary market activity, it's XRP being used for its intended purpose, it's XRP being used as a way to transfer value or a commodity. These sales are not securities, and this distinction is actually now being made in cases being brought like the one we're talking about right now in Dapper Labs. What this shows is that the Ripple SEC case is already having a profound impact on the industry. People are already starting to look away from the idea that secondary sales could be a securities violation, and this case right here just further proves that. There is a clear distinction between how something is sold and its actual status, and that is being perfectly shown in this case right here. The people who are alleging that Dapper Labs sold unregistered securities, those people aren't making the crazy accusation that every single time one of those NFTs are bought and sold, every single one of those transactions is a securities violation. That claim right there is overbroad, it doesn't make sense, and that's what the SEC tried to do with Ripple. What they are alleging is only that the initial sale could have violated securities laws, and that is an accusation that is much more winnable. This really just goes to show how overbroad the SEC's case against Ripple really is, and it really just gives you a great idea of why the SEC is so unlikely to win on their claim. So now I want to move on and go over a very interesting thing David Schwartz just put in his Twitter bio, and we're going to break down what he could mean by this because this is generating a ton of attention right now. David Schwartz put in his Twitter bio, when a scrappy financial startup takes on a web of corruption and betrayal to bring instant payments to the masses, they learn that the cost of disrupting the status quo is higher than could have ever been imagined, forcing them to decide between their vision and their survival. So a lot of people are reading this and getting very nervous. They're saying, what do they mean by between their vision and their survival? Does that mean Ripple's going to have to kick retail out of the market? Does that mean their vision is going to fail so the founders won't get put in jail? But we're going to break down what he meant by this because David Schwartz already dismissed a lot of the extremes here, and I think there is a much better explanation of exactly what he was talking about. So I went through some of David Schwartz's other tweets around when he changed this to his bio, and I have a feeling this is exactly what he was talking about. He tweeted out in response to someone, "The thing is we can't succeed if the industry doesn't succeed. A world where, say, Twitter is the only successful internet company is unimaginable. I expect we will always prefer wins for everyone in this space if we can." So right here, David Schwartz is essentially alluding to the fact that he wants Ripple to get a win against the SEC that's going to help everyone. He doesn't want Ripple to just win and only get a win that's going to make XRP not a security. He wants to get a win that's going to give every single cryptocurrency out there clarity. Now, unfortunately, I don't know how realistic this is, and I think that's what David Schwartz is saying in this right here. His vision is for Ripple to win and give the entire space clarity. He wants the Ripple SEC case to be a benchmark that any crypto company operating in the US can look at and say, okay, this is how I operate compliantly in the United States. But what he says right here is that he is being forced to choose between this vision and his own survival. And I think what he means by this is like, hey, even though we want to give clarity to the entire industry, we might not be able to. At the end of the day, Ripple has a fiduciary duty to their investors to do what's best for them and not the entire industry. Yes, it was likely Ripple's vision to get clarity for the entire space, but that might not be possible. The SEC is obviously playing hardball here, and I have a feeling the SEC is not going to want to give clarity for the rest of the cryptocurrency industry. I can see the SEC giving up on this case. It's already gone terribly for them. But I cannot see them giving up on all of crypto. I don't think that makes sense. And I think this is exactly what David Schwartz was talking about here. He wants to give clarity to the entire space. He wants to make sure blockchain can prosper in the United States. But that might not be possible because how the SEC is playing the game. We're going to have to see how this plays out. Obviously, this doesn't apply to any decision made by Judge Torres. I have a feeling what he's talking about right here is the current settlement negotiations. Now, obviously, we don't know any of this for sure, but this is definitely how I'm interpreting it and a lot of other smart people in the space. So I want to finish this video off and do a quick discussion on ODL and whether ODL will increase the price of XRP or not, because there are some influencers in the space. Specifically, I got into a discussion with Moon Lambo about this, whether or not ODL will impact the price of XRP. Now, Moon Lambo doesn't seem to think it will, and that's because he is saying that every single transaction made on ODL has a buy and a sell. So if you were to buy XRP at 30 cents for the ODL transaction, you're also selling it at 30 cents. Therefore, they cancel out and there's no movement in the price of XRP. Well, I want to quickly go over why I think that theory is wrong, and it's mostly because of the very simple fact that XRP isn't being used to transfer the value in ODL. XRP is being used as liquidity. And the more value that's being put on ODL, the more liquidity that you need. Liquidity on the XRP ledger network works like this. You have a set amount of XRP, and the price of XRP times that set amount equals the amount of liquidity. So say for the ODL product, you only had 2 XRP, and both those XRP were trading at $1. Well, you would have $2 of liquidity on the ODL network, probably not going to get you very far. But if you had 2 XRP on the ODL network, and I said, okay, well, we need to scale that volume because I want enough money to be able to pay my rent. Well, we could have each XRP trading at $500 then, and then boom, we have $1,000 worth of liquidity. Now, this is a very, very simple example, and the product is so much more complex than that. But what I want to get across here is that the fact that ODL is buying and selling on the XRP ledger does not mean it does not impact price. At the end of the day, in the ODL model, it is critical that XRP is used to create liquidity, and the higher price XRP has, the more liquidity there will be on the network. Now, there are so many more things that go into it. I just want to go over the very basic concept here to help you understand that the more volume that ramps on Ripple's ODL product, the more Ripple is able to disrupt the financial sector and the more business activity they're able to bring into their ecosystem, the higher the price XRP will be to account for all this new liquidity. Anyway, thank you so much for coming. I hope you enjoyed this update. If you did, make sure to like and subscribe. It really does mean so much. And for now, Mickle out.